in the name of God. Hello to all of you who are interested in the capital market. I am Ovais Bagheri. I am a PhD graduate in financial management from the University of Tehran and a member of the United States Technical Analysts Association. We are here with you, dear ones, with a course on introductory and advanced technical analysis. And before anything else, before starting this course, I want to congratulate you, dear ones, who are watching this course, because by the end of this course, you will become familiar with very important strategies, concepts, and topics, which will allow you to easily buy and sell stocks in the capital market after this course, and enjoy these strategies as a professional analyst in the capital market. Well, as you can see, for the initial discussion on technical analysis, I will briefly and concisely talk about the framework of basic technical analysis and then advanced technical analysis. After that, we will see how we are going to complete this course together and have a great and excellent course alongside each other. At the beginning, we will talk about the topic of basic technical analysis. 1 point. About basic technical analysis that I need to mention to you, dear ones, is that this educational course does not require any prerequisites. This means that regardless of your level of education or expertise, you can learn this educational course and proceed with buying and selling stocks. Well, for the basic technical analysis course, we first discuss the concept and history of technical analysis, and then we have a series of tools in the science of technical analysis called indicators and oscillators. In fact, indicators and oscillators in technical analysis are tools that allow you to measure stock fluctuations using them. And after that, we will move on to a series of important analytical methods, and then we will delve into the very important and fascinating topic of advanced technical analysis. With the strategies you learn in advanced technical analysis, you can start your work as a professional analyst to analyze stocks in the market. Well, initially, we start with the topic of the history of technical analysis and actually begin with introductory technical analysis. Perhaps a very interesting point that I would like to explain to you, dear ones, is the emergence of technical analysis in the capital market. It might be interesting to know that the history of technical analysis in the world goes back to 2 points, 2 locations in the world, one related to ancient Egypt and the other to the Japanese. In ancient Egypt, if you pay attention to the architecture of the pyramids, you will realize that thousands of years ago, when the pyramids were being constructed with all the limited resources available at that time. But the architecture of the Egyptian pyramids precisely followed a sequence of numbers that we now call the Fibonacci sequence. It adhered to this mathematical sequence and very precisely and meticulously demonstrated technical analysis to the world using a series of mathematical concepts. In other words, in the Egyptian pyramids, the architects used a series of mathematical terms to design the pyramids very precisely and meticulously. Therefore, the first point in time for the emergence of technical analysis dates back to the architecture of the Egyptian pyramids and the existence of numerous mathematical and geometric secrets, which, by adhering to Fibonacci ratios observed in the pyramids, marked the emergence of technical analysis in the world. But another interesting point is that the second region that contributed to the development of technical analysis relates to Japanese rice farmers. It's very interesting. You might find it intriguing to know that Japanese rice farmers, when they planted their rice, actually wanted to harvest their product. When they sold their product, they recorded the selling prices in ledgers, and then by using those selling prices over different time periods, when they connected the geometric locations of the selling points, they arrived at a series of broken line charts. By analyzing these charts, they predicted their future buying and selling conditions, which was very interesting and fascinating. This led to the emergence of a new science called technical analysis in the world, which perhaps you and I in Iran are learning this course as an extracurricular course outside of the university curriculum. And it's interesting to know that in the United States and many other countries, the technical analysis course is taught as a university course, and many people actually study in the field of technical analysis. And a very important point that existed at that time in the activities of Japanese rice traders was that Mr. Steve Neeson, a Swede in 1989, brought this knowledge, meaning the practice that Japanese rice traders had developed to Europe as a science, and gradually technical analysis gained a great deal of prestige and respect in Europe as well. But the gentleman you see in the picture is Mr. Charles Dow. He is the founder of the Wall Street Journal magazine in 1893 and is someone who was able to predict stock prices in the United States market. And it is mainly Mr. Dow's theories that have actually created an index known as the Dow Jones Index in the United States, which even today is still used as the main barometer of the US stock market. Well, Mr. Dow and Jones generally created two indices, namely the Dow Jones Index and the Dow Jones Rail Index. And as I mentioned to you, dear ones, in the previous slide, the Dow Jones Index is still used today as one of the most powerful indices of the US stock market. However, a very important point in the history of technical analysis is the discussion of the Great Depression that occurred in 1929, during which the capital market experienced extremely severe and terrifying declines. This depression, if you look at the next slide, you will see on the price chart that the Dow Jones Index, which is the US stock market, gradually gained strength from a point in 1897 and was able to grow year by year, and it went from 39 points in 1929, meaning after 30-some years then to reach 380 points. But in 1929, that terrifying and dark nightmare occurred in the US market, and we witnessed the horrific and heavy drop in the Dow Jones Index price chart in 1929, which suddenly fell back to 42 points by 1932 over the course of the 3 years. That is, an index that took over 30 years to build and grow suddenly experienced a terrifying drop over 3 years, and this Great Depression caused the US stock index to revert to levels from 34, 35, or even more years prior. But now, why did technical analysis gain such high esteem here? The reason was that only those individuals who were able to predict this recession at that time were the technical analysts of the capital market, and technical analysis had warned of this recession and heavy decline before 1929. This factor, when the decline occurred, led to technical analysis gaining significant esteem and strength among people worldwide. From then on, technical analysis became favored by most analysts, including major American and European economists. Well, now, if we want to talk about the popularity of technical analysis, it goes back to Mr. William Delbert Gann, the gentleman you see in the picture. He was the person who later invented the Gann box, which we become familiar with in advanced technical analysis. And he was one of the individuals who predicted that great disaster and managed to make technical analysis appear very appealing. However, if I were to introduce a few important references in technical analysis to you, dear viewers, the first and most important, and perhaps one could say the encyclopedia of technical analysis, is the book Technical Analysis of Stock Market Trends by Mr. Edwards and Meiji. This book was actually published in 1948, and up to now there have been more than 9 editions of this book available, which you can obtain and study. However, in this technical analysis course, the book we are teaching you, dear ones, is Technical Analysis of the Financial Markets by Mr. John J. Murphy, which has also been translated in Iran. Of course, as we are recording this video, we are outside of Iran while recording it. I recommend to you, dear ones, if you intend to actually study this book, I will provide you with the original PDF of the book, which is in English, and I recommend you study that version. Because in Iran there are many translations of this book, but from what I have seen, most of these books have translated and conveyed about 40% of the main concepts of the original book. My suggestion is to definitely try to use the original book and the English version for this analytical field. But Mr. John J. Murphy's book is one of the general and solid books on technical analysis, and a book that can really help you as a technical analyst and someone who wants to get acquainted with the world of technical analysis. You should use this book. This book has also been translated and has many translations in Iran. One of the best translations of this book, perhaps among the rest, is the translation by Mr. Kamyar Farahani Fard and Mr. Reza Gassemian, who translated this book into Persian, and it is available for you, dear ones, to obtain. However, the point I want to make to you, dear ones, is that this training course we are offering is a completely practical and applicable course in the capital market. And by completing this course, you will no longer need to read the book for the course. Everything you need to learn about technical analysis. As a chart analyst, I will teach you how to implement the price chart of a stock in this training course, and after this course, you won't need to read theoretical and academic discussions. However, if you are interested, you can use these books. An interesting point about the science of technical analysis that emerged in 1960 was the introduction of computers into the stock market. It might be interesting to tell you that before computers existed, a technical analyst, he had to analyze the price chart of a stock to perform a technical analysis. To analyze the price chart of a stock, analysts were forced to implement this stock price chart on a series of charcoal sheets that they prepared themselves. After performing the analysis once, these sheets were no longer usable and they would discard them. For this reason, the task of analysis was extremely difficult and exhausting, because they had to painstakingly prepare the analysis materials. However, with the advent of computers in 1960, and especially the use of various software that actually made technical analysis much easier for us, the science of technical analysis became very attractive to analysts. Today you can perform your technical analysis on any price chart of a stock you need in the shortest possible time using the relevant software, and you can easily save your analysis as well. And you can use it again over different time intervals. Therefore, you won't have any concerns about acquiring the analytical tools and equipment. Well, the gentleman you see in this picture is Mr. Wells Wilder. In 1970, Mr. Wells Wilder invented a very, very powerful indicator called the relative strength index, or RSI, which we refer to as the relative strength index, and we will become fully familiar with it in subsequent sessions. But the important point you need to know is that with this powerful indicator, he gradually became known as the father of technical analysis in the world. And if someone asks you after completing this educational course, who is the father of technical analysis, you should refer to Mr. Wells Wilder and the powerful RSI indicator or oscillator that he invented. He is regarded as the father of technical analysis. Well, we have concluded the introductory topics related to the history of technical analysis here, and now we want to move on to a new topic and to continue with you, dear ones.